Hey guys, what's up? My name is Tato Palalo. I'm an ICT trader. I've been trading the market since 2020, and on this video today I'm just going to be breaking down a trade that I took yesterday. I could have posted it yesterday, but I couldn't. I just had to close the charts after I was done and walk away, right, to keep myself longer in the markets. What I generally do on this channel, I just break down real trades, share my process, and document my journey to consistent profitability. So let's get into today's trade. I was looking at the US NASDAQ 100, or NASDAQ really, US 100, and first off I started off on the daily time frame, because that's how I set up I do my pre-session analysis. I start on the daily time frame. That's pretty much around 1500 hours. That's Central African time, and most probably around 9 a.m. New York time, right? That's when I start looking at the charts and preparing for 9:30 open, and start looking for an entry from 9:40 until 1100 hours in New York time, right? That's important. So yeah, I was looking at the daily charts. At the time, we only had this candle printing, and at the moment it had already taken out this high, but had not entered yet into this daily fair value gap that I have marked here. This is the low of the fair value gap, which is also the previous day high, which is the previous Friday, last week's Friday's high, and marked the high of this fair value gap. Once again, it's important, and you can always also check the consequent encroachment of that fair value gap, right? And here you go. It's very important. Just look at how price is reacting to this. But I also approached this day, or this week, trying to figure out where is price generally planning to print, right? Where it's likely to go. And I marked this trading range, this dealing range actually, and just wanted to see the where price could possibly make a turn, right? Because generally we have price breaking down, which is having a bullish, the bearish market right here. Of course, when you zoom out, it's kind of consolidating. But when I look at this is bearish, and I want to see continuation of this kind of price action. And what you generally expect to see on the market is if price is printing bearishness, or is just bearish, you'd want to see price break the previous low, and have a counter trend movement, come back to at least close to the 50% level of that dealing range, and or be above it. We expect price to get into premium before you can sell down to discount. So price printed up, got into premium. I was expecting price to get into premium. I was looking for a PD array that price could react to before it can break down, right? So price got into premium and got into this daily fair value gap, and I'm expecting for price to break down, take these lows, and probably take those previous week's lows. And yeah, that's what I was having in my mind. And this was before price got into this fair value gap, right? So after I marked this fair value gap, marked the previous day high, previous day low, price had already taken the previous day's low and rallied up to take the previous day's high. That was Monday's high, and got into a fair value gap during the New York 9:30 open. I usually wait for price to print for at least 10 minutes, and then I start looking for my entry from 9:40 through 10 a.m. or even 11 a.m. If I don't get anything between then it's not a trading day. I'm not going to trade that day. So after looking at the daily time frame, I made sure to go down to the 4-hour time frame. Let me reduce a lot of these markings. I went to the 4-hour time frame. As you can see, I still have the droppings from the daily time frame. You have that daily fair value gap high and low, and that previous Monday's high taken out on this 2 a.m. Candle. And I also did mark a fair value gap that was formed within the 4-hour time frame. That was before the 9:30 open, right? And I was expecting, if at all price hasn't taken out this high yet, I'm expecting to see price come down, take the high, actually get into the fair value gap and continue printing higher, right? Or price takes the high, gets into the fair value gap, prints down, gets into the 4-hour fair value gap, and then rallies up before it can actually get to the bottom of these price levels that I've marked out. I'm looking for price to get these lows. I'm also looking for price to get this would be my ultimate low for the week, right? Ultimate trading goal. But yeah, we marked this fair value gap. I marked this as the 4-hour fair value gap high and the 4-hour fair value gap low, right? So I was expecting at least for price to get into this level before it could take this high, or get into the fair value, the daily fair value gap before it goes into the 4-hour fair value gap, and then continuing high, right? One of the two had to happen. So I went down to the 5-minute time frame and waited for price to print, and at 9:30 price immediately got into the 4-hour, I think went to the daily fair value gap, which was important for me. And yeah, after all that, once price got into the 4-hour daily fair value gap, I made sure to go down into the 1-minute time frame, because of course I couldn't see anything that I really that I'm looking forward to, since the daily high was taken out. The 635 high was taken out. That's important. 630, 635, 730, 830 highs, if they are taken out during the 8:30, 9:30 open, that's important. So that is also marked out. So price got into the daily fair value gap. Once it got there, I started now looking for an entry, right? I started looking for my entry to sell into the low, this low that is actually the high of the 4-hour fair value gap, which is important. After price broke down, I marked out the nearest or the closest inverted fair value gap I could get, and put my sell limit, and had my take profit right on the high of the 4-hour fair value gap, and my stop loss right above the 9:30 high, right? So what did price eventually do? Price got into the inverted fair value gap that I marked out in the 1-minute time frame. Also, this is also available on the 2, 3, I think, 2 and 3 minute time frames. Yeah, that's important. I just put that up, and then price traded back into that at 9:36, traded back into that 9:38 and 9:39. This is where I got into the trade, and then it primarily took close to 30 minutes to hit my take profit, and I had I had copied this trade to 4 of my accounts, and it was a green day. And immediately after price got into the 4-hour fair value gap, same thing happened. You had price pushing up with displacement, and what do we have here? An inverted fair value gap. And price did what? Got into this inverted fair value gap, and this would have been your entry. I generally look for at least minimum a risk to reward of 1:2 or even more, 1:2 or 3. I really never try to get more than 3, because it's most of the times a recipe for a losing trade, or just trade is going to turn on you. But it's fine. And that's all that I had for you today. If you wanted to get into something like this, if you want to learn and master something like this, hit me up. Check out my website, polelotradingacademy.ac.bw, and you'll find a self-paced course there for free. And if you want to continue with something like that, then I'll get you into a group. Have a great day. Have a great profitable week. Bye-bye.